Hey, ladies and gentlemen, welcome back. Welcome back, welcome back. It's been a rough week, huh? Glad to see everybody in here again. It's been a while. A lot of things have happened already. Man, we're just gonna hang out for a little bit, let some people join, and then we're gonna talk about what has happened in the market and my takes on it. But if you've been invested in this market last Friday, you definitely understand now what the volatility can mean in this market, huh? How are you guys doing? How are you guys doing? Let me just post on Twitter real quick that I'm live so that people get the opportunity to come in. But yeah, how have you guys been doing the last week? It's been a roller coaster ride. How do I do this? Mm-mm-mm. Yes, perfect. Now everybody is up to date. All right, all right, all right. So silver has been slammed down pretty hard again this Friday, and it's one of those days, huh? Just -8%. Just when it seems like everything is going well, you'll get another -8%. I love this market, honestly. And we're just gonna let some people join in. And then we're gonna talk about the carnage that has happened. I know personally I've been down quite a bit last Friday. How about you guys? You guys been invested at all? Have you guys sidestepped this decline? Have you guys been hit in the face just like me last Friday? Gee. All right, let's just get into it real quick. So, last Friday, what happened? Huh? Let's start with what we're looking at. Silver. I know that silver is the commodity that gets thrown around a lot on days like this. So it's a lot of movement within silver, and that translates to movement in the miners as well. RHAs, good to see you, man. Punched in the nuts, but I bought the dip in gold and silver stocks. Very, very astute observation. The gold and silver stocks are still cheap. That's something that I wanted to look at in a little bit. I wanted to take my spreadsheet that I've made for you guys, and I wanted to look at the valuations of all of these stocks because, stocks were cheap, right, last week, but after this day, let's see if they're still cheap, right? Because when silver drops 10% in a day, the first thing, right, on a lot of people's minds is going to be, well, are my stocks going to go down? Probably, but should they stay down? That's the question then. But yeah, as you can see, silver definitely slammed down. We drew these lines a couple months back, these sloping lines of resistance and support, and you can see that silver is definitely underneath that right now. I'm a bit sick, so you have to excuse my coughing. And we are now entering into this sort of support zone underneath here. Let's see if this holds, right? Where we've been wicking out right there and where we've been right there. Let's see if this holds. If it doesn't, it can go down to, I don't know, to this support zone right here maybe. So it's probably going to bottom out somewhere between 67, like 50, something like that. And let's just see. Let's see if all of these gold and silver stocks that we've bought and that we've been buying over the past year, right? Let's see if they're still cheap right now, because that's what it's all about at the end of the day, right? Let me get this one. At the end of the day, you're buying stocks because you think they're cheap, right? You're not buying stocks because you think that the silver price is going to go up, right? Let me make this. Let me make this clear for you guys. So what I've done here is, well, I've given you guys a little sneak peek of my own personal portfolio right here. But what I've done with this spreadsheet, and what I wanted to go over in the beginning of the stream, is I have put together a list of all the stocks in the GDX, the GDXJ, the SIL, and the SILJ. So that is the 4 biggest gold and silver mining ETFs. People say that it's a gold mining ETF and a silver mining ETF, but honestly, there's not much difference between them. You can see that when you download the spreadsheet. You can go to the Buy Me a Coffee page. The link is in the description, I believe, or it's buymeacoffee/silver lining analysis. It's on there for free. You can download this. And what this does is I've picked up all of the names in the ETFs. Then I've sourced how many silver and gold equivalent ounces are in their deposits. And then I make a very rough calculation. All right, what are these ounces worth? And what is the stock trading at today? And then after that, I have a valuation method for myself that I myself use to figure out what is a cheap investment or not. And I wanted to see today if things are still cheap. So you can see definitely yesterday a lot of big moves, right? Minus 14%, minus 10%, minus 10%. I mean, everything just got slammed down. Seabridge minus 13. This is just a GDX, right? So let me just go into this tab right here. This is the valuation. So when I look at these gold and silver stocks, I usually take a percentage of their deposit value as a potential buyout, value. And that is how I evaluate these stocks. And I believe that a kind of a fair price for some of these deposits that could become mines eventually. So there's a lot of questions in there, right? There's a lot of due diligence that still needs to happen. But rough valuation, what is the stock worth? What is the deposit worth if it became a mine or if it was sold to somebody else? I think people pay about 15% of the deposit value as a potential buyout. And you can see here that as of right now, a lot of the stocks in the GDX are actually above that 15%. I should make an extra column in this explaining that more clearer, I guess. But you can see Agnico Eagle, pretty well priced, 23%. Newmont, just below it, 14.3%. Barrick, pretty cheap still, 4.7%. And then we just go down the list, right? All of the stocks are in here. I put all of them in there, so you guys can just see it for yourself if you download this ETF. But down here, I put the average for the entire ETF. And you can see that the GDX right now, at this gold price, at these stock prices, actually pretty fairly valued compared to the price of gold. It's 13%, right? So with this gold price movement, with the silver price movement, you shouldn't be expecting your stocks to move all that much more than gold moves. So, you shouldn't be expecting any movement in the GDX, honestly, from this level. But if gold goes down, of course, then the GDX will go down too. Then if we look at the GDXJ, right, this is the first time that I've looked at it in a while, so I'm just curious for myself too, what these mining stocks are worth at the moment. You can see that there are definitely some more expensive stocks here in the GDXJ, right? Core Mining, Alamos, Lundin Gold, pretty big names, New Gold, all pretty big names that are pretty expensive, but there are also a lot of cheap stocks in here, right? Endeavor Silver, 1.9%, right? Seabridge, no, well, we've seen about Seabridge. There's a couple cheaper stocks in there, right? Here, McEwen Mining, 1.12% of their deposit value. So, in essence, right, this ETF shows you pretty simply how much is a company worth as a percentage of their portfolio or their deposits, right? So the GDXJ is a bit cheaper, 9.7%. So if gold drops, you should expect GDXJ to not drop as much as gold does because the stocks in the GDXJ are priced cheaper as a percent of their deposit. And now I can already tell you if we go down this list, if we go down to the, I can show you right there, to the SIL and the SILJ, right? The valuations just get lower, but I just want to see how much lower they get. As you can see, the ETF, everything is automatically updated. So if you download this, you know, everything is up to date always. SIL is average 8.2%. What does that mean? That means that as of the value of their deposits, these stocks on average are valued at 8.2% of their deposit value. So that is about 50% below what I think they should be valued at. So there's still a very big undervaluation in the SIL, even though gold prices fell, even though silver prices fell. If we go to the SILJ, this is an ETF that represents more what my portfolio personally is, which is development stories, which is non-producing assets at the moment, right? Exploration assets, developing mines, acquiring companies. They are valued the lowest of this whole bunch. They are valued right now at 6.6%. So that means that there's a just shy of a 2x in there. So this is priced at about roughly 40% of what I think it should be priced, which says a lot. That says that a lot of these stocks are still extremely cheap, even though silver just fell, right? You can see that here, silver fell 8%. There is no overvaluation in these stocks right now. As far as I can see it, as far as I value them, there is no overvaluation in these exploration stocks, which means that if the price of silver falls 8%, 10%, 20% from here, still my positions are more valuable than this price drop. That is a very long-winded way of saying that you shouldn't care too much about the volatility in the prices of gold and silver, because a lot of these stocks that we are all invested in are still extremely cheap. Just if you look at that valuation. Well, that doesn't mean anything, right? The valuation of a stock and how cheap it is doesn't matter at all. Everything gets sold on days like this, right? So RGH, I mean, it's a good opportunity to buy some more, to get some more stocks, to broaden out your portfolio, because that compounds over time. You want to buy when it's cheap. You want to buy when it's on sale, right? Silver got hammered. I closed my positions after Q1, failed to blow doors off, but looks very good now. After Q1, what is that? After March? Damn, that was a good time to sell. That was a good time to sell. I was thinking about selling some of my portfolio around the beginning of Q1, somewhere here. But you know, I didn't, because I don't want to. I'm in this market for when the real shit happens, right? For when everything just blows up, for when we have a big debt crisis, for when we go back to a gold standard, for, you know, events like that. So I don't want to be trading quarter on quarter. I don't want to get out when it's a little bit more expensive and then try to get back in next month, because I know that, you know, that's just going to cost me a lot of time, a lot of energy, and a lot of effort for what I seem to perceive as not as much reward. But, you know, I could be wrong with that. But there's just one thing that I want to trade, and that is this undervaluation, right? This is what I want to trade. I know that these stocks are cheap, and I know that these exploration stocks and these developers are extremely cheaply priced. So I want to be in them. I don't want to get out now because silver drops 8%, because it could drop another 50%. Well, if silver drops another 50%, right? That is the... I don't want to shout my own workout too much, but it's a pretty useful spreadsheet, right? Because right here you have the price assumptions of this silver. This is automatically updated, but we're gonna put in our own numbers right now. We're gonna get a little rogue, and oh, look, what is it doing? And we are going to say that, and copper is going to be $5, right? Okay, so now I've set this spreadsheet to a world where silver is going to fall to $50 and gold is going to fall to 3,000, right? So that would mean that we are going to go into this correction. We are going to drop another 25% in silver, right? And another, let's say, from here, right? Another 30% in the price of gold. So we're going to enter extremely big bear markets, right? We're going to crash all of these prices. What is going to happen to these stocks? Let me get my spreadsheet back. Oh, let me update this. I believe, right, that as a percentage of the price of your portfolio value, right? So you have a company, it owns a deposit. That deposit has value, economic value, because it contains minerals. I believe a stock should be trading roughly somewhere about 15% of that value as a potential buyout target, right? And we see right here that even if silver drops to $50 an ounce, and even if gold drops to 3,000, the SILJ is still undervalued. So that gives you a little bit of perspective of what I'm talking about here. These stocks are so cheap, these stocks are so undervalued, that gold and silver could drop 30% from here, which is, by the way, an entire bear market, right? That's an entire stock market crash. That's an entire blowing up of the entire trade, and you wouldn't still lose money. Well, you would lose money on paper because all of these stocks will go down in that crash, but that would mean that these stocks would get even cheaper. So, you know, I welcome these dips, honestly. I welcome this volatility because it means that people are mispricing a lot of things because people don't understand this valuation, right? People look at it saying like, oh, all these stocks went up so much and now gold is going to go down. So all of these stocks are going to go down so much more. But that is simply not the case. Well, it could be that all of these stocks go down, right? Valuation and stock prices have nothing to do with each other. But, you know, fundamentally, all of these stocks are cheap, right? And fundamentally, we are making good buys. Hey, Manuel from Switzerland. How's it going over there? How is it going over in Switzerland? Must be nice there this time of year, no? But yeah. Silver and gold could drop another 30%, and we would still have undervalued stocks. And of course, this is a very broad way of looking at these stocks, right? This shouldn't be taken at face value, right? Every single one of these stocks has their own story behind it. It has their own problems. It has their own shortcomings, right? And it's up to you to try to investigate which one of these stocks is good for your portfolio, good for your fit. You understand the story, you like it. But, you know, just understand that it's so damn cheap out there that, you know, all of these moves, they're quite literally meaningless, right? The fact that silver broke out and broke down, and the fact that it might go to 50, but it's all meaningless. It doesn't mean anything because all of these stocks are still so damn cheap. But you know, when people see this kind of movement in their portfolios, right? I was down about 10% yesterday, something like that. When people see that, and when you don't understand that what you own is cheap, then it's going to worry you. Then you're going to be thinking, oh, did I make a bad decision buying these stocks? Well, you know, only if you sell at the bottom. Only if you buy something cheap and sell it cheaper, right? But that's the point of the game. The point of the game is to buy something cheap and then hold it until it's not cheap anymore. Because, you know, I know a lot of people probably aren't in these mega big caps, but, you know, maybe they are. But let me see what happens when we put the same numbers, right, into the GDX, right? What happens then is that the GDX then becomes overvalued, right? So then you would expect GDX to fall. So it's a very different story based on what mine you are exactly in, right? If you are in the bigger mines, you have much more to risk, right? Because these mines are pretty well priced. But if you are in these smaller mines, right, way more risky, by the way, way more important to do extreme good due diligence and be kind of lucky as well, but a lot cheaper. So it really depends on what you are in this market. But yeah, go download this spreadsheet. It's on my Buy Me a Coffee page. It's free for everybody. Just go on there, go to the comments or the posts that I made, and you can just download it there. But yeah, I hope that that helps somebody to navigate this storm, because I expect a lot more of this, right? Of these kind of days. Because if you expect a recession to come in the coming, I don't know, whatever, 2-3 years, you would also expect to see this in your portfolio on a regular basis, right? Because when the market goes down, gold and silver are going to go down as well. The sell-off on Friday was not caused by anything related to silver or to gold in particular. We are simply just roadkill, right? We're simply just collateral damage at the moment. And all of these movements in your stocks are collateral damage as well. But understanding that and understanding that these stocks are cheap will help you to navigate that storm, right? Otherwise, you're going to sell and then you're going to go buy back in at the wrong time. And then, you know, you're in this perpetual, motion of falling over yourself, becoming poor. And that's not what you want. Anyway, I wanted to talk about that for a little bit. See, I guess I could be a little bit more open with what my portfolio looks like. This looks a lot like my portfolio. It's not exactly it, but as you can see here, right? -8%, -7, -13, -6, -11, -8, -10, -8, -15. Damn, that's a big one, right? You shouldn't be stressing about this at all, because all of these stocks, you know, some of them might be cheaper than other ones. You know, I looked at Abra Silver the other day. You know, it ran up from 170 to 14 bucks. Of course, that stock is less cheap than, for instance, a Goliath Gold or a Goliath Resources, which hasn't really done anything yet. You know, it went from 80 cents to 140. Of course, this stock is cheaper than, you know, everything is a different case and everything is a different story. But generally speaking, we are still talking about cheap stocks. And another thing that I wanted to talk about is, if you see these kind of movements in your portfolio, it's also very important to understand that the size of the down move doesn't reflect the company itself, right? So the size of the move has nothing to say about the project of the company, about the management team, about their goals, about their financial status. It has nothing to do with that at all. Not on a day like this, right? Everything is going down today, or well, last Friday. So everything is going to get hit. And different stocks are going to get hit in different ways that doesn't even have to reflect anything about that company, right? If you look at my portfolio right here, you can see a lot of stocks went down 8%, but also some stocks went down 15%, right? Abra Silver was down 13%, while Integra Resources was down 7%. So that means that, is Abra Silver a worse stock right now than Integra is because it dropped more on a down day? No, probably not. It has probably something to do with the fact that Abra Silver already ran up a lot, right? And there's now a lot of loose money in here that gets shaken out quicker than in other stocks. Hey, nothing. Happy to join you live. I own a junior. Wonder if you can help me take a look. Yeah, we'll take a look at that in a little bit. Yeah, after I'm done with this, after this rant, we'll go over it, and then I got some time to look at some stocks today, so that's gonna be fun. But yeah, this is you know, you gotta laugh at these days. Honestly, you gotta be positive on these kind of days. If this is going to trigger you, right? If this is going to get you upset, then you're not gonna make it. Honestly, right? We're running a marathon here, right? And getting upset or getting hurt by these kind of days right now is, you know, that's like getting tired a kilometer into a marathon. Well, you're not gonna make it. You're not gonna make it to the finish if if you can't get through these kind of days, because this is what it's about. These are the kind of days where you can add to your portfolio, where you can reassess your cases. Because what I found in the, let's say it's 6, 7 years that I was in this market right now, on days like this, when stocks drop 15% out of nowhere, for me, this is a perfect moment to reassess my portfolio, because the stocks that you get worried about, the stocks that you keep thinking about, are worth to look into more, right? If I have a whole list of 20 stocks that I own and all of them go down by 10% on a day, there's probably going to be one or two in these 20 stocks that you're going to be thinking about, like, oh damn, what if they don't recover, right? What if I bought this on a speculation because somebody told me to, and what if they don't go back up? I don't know the story well enough. Well, that is a trigger for yourself to really get into that stock and do some more research. That's what I use these kind of days for. What's your short-term outlook for the price of silver? Well, right now, my short-term, meaning, the next couple months, coming summer, I believe we could hang out in this 60 to 70 range right here. We could go back down to 50, something like that. I don't know. I don't really care about the short term all that much. I just know that silver is extremely undervalued compared to gold. Gold is completely undervalued compared to general equities, and general equities are in the biggest bubble ever created in human history. But I also understand that if that bubble bursts, then everything is going to go down and everything is fucked, right? For the coming 2-3 years. So short term, we could go to 300. We could go back to 40. I don't care either way, because my stocks are cheap right now, and they're cheap at $40 silver, right? And they're going to be extremely cheap at 300. But yeah, I don't think this market is not for short-term trading. I believe, this is such a market ripe for ill-intended purposes. This is a very illiquid market, especially these smaller stocks that we are, that I'm in. I'm gonna keep it personal. That I'm in. I know that a lot of these stocks are very, very illiquid. So short term, you shouldn't be doing anything, because if you are in this market with size, meaning if you have a decent sized portfolio, if you're going to trade short term on that, then you're going to have a terrible, terrible time. So, buy these stocks, sit on them, don't react to the short term. If you want to do short term, there's a lot of other things that you can do. Crypto, gambling, going to the casino, putting it all on red, going to the bathroom, seeing what happened afterwards, just living life to the fullest, I guess. But that is not something that I really care about in this market. So if we look at the stocks, right, we just look at the valuation of these stocks, we can definitely see this is the SILJ. So this is the smaller silver mining ETF. That's what it's called, but it doesn't really have any silver miners in there. So, you know, it's just the ETF. But we drew this box a couple months ago, and we see that we're coming pretty close to this support zone right here. I would expect that we are definitely going into this. So that's another maybe minus 16% that we have as a potential here. Does that matter? No. Why does that not matter? Because the SILJ is extremely cheap, right? It's undervalued at the moment. So it could go down and then it would just be more undervalued. And that's the real, that's the difference. That's the thing to get into your head. These stocks are very cheap. But, it's good to keep a eye on all of these ratios, right? Because we looked at the gold to silver ratio. And, I drew this flag a little while ago, right? Then I thought that it would break out upwards towards, this is very amateur level technical analysis, so, but I thought that it would break upwards towards the 80 something range, right? Instead it broke downwards, so we moved this line, but it looks like it's breaking upwards anyway, which means that we might go up to 80, which means that a lot of speculation is about to leave this market. What does that mean? A lot of people are going to throw in the towel on their holdings. And that means that if you are an astute investor and you have an idea of the valuation in these stocks, you are going to get better prices. Isn't that great, huh? This summer, looking forward to gold between 39 and 4,100 to add more in my basket. Yeah, that's what it's all about. It's about making money and then putting it to work, right? And you want to put it to work at the cheapest prices. Gold is pretty cheap right now. It's going to get cheaper if this trend is going to continue, Everything can change on Monday, but there's still a couple things that need to happen before we really can say that any of these gold stocks are going to be extremely expensive, right? We have a extremely big stock market bubble. We have the biggest bubble going on in tech right now, the AI mania. We've seen over the past week that all of these big tech stocks are running out of free cash flow. They are diluting their stockholders by selling shares, right? Something that was previously just reserved for the mining industry, but very good to see that it's now also happening in the tech space to get people a little bit accustomed to stock dilution. There's something previously unheard of. But you can see that these big tech firms, they're running out of cash. These big tech stocks are trying to sell shares. So that means that the bubble is kind of coming to an end at some point, right? All of the money that's been poured into there, it's coming to an end. And if that bubble pops, you can sure as hell bet that everything in the world is going to get sold. Everything that isn't bolted to the ground. That means that stocks are going to get sold. Bonds are going to get sold. Gold is going to get sold. Silver is going to get sold. All of these mining stocks are going to get sold. Everything is going out the door if that happens. And, whenever that happens, gold is going to get cheaper and silver is going to get cheaper. But I hold all of these gold stocks for what happens after this collapse in this bubble, because I believe afterwards, gold is going to shoot up, silver is going to shoot up, and all of these mining stocks are going through the roof. Have you ever taken a position in Dryden Gold? Dryden Gold, I believe it's in my... Oh no, that's Dynasty Gold. I'll look into Dryden Gold later. We can get into that. I know it from somewhere, but I can't really get it to the top of my head, so... let's just look at these ratios first for a little bit. Right, so we've seen gold to silver ratio, potential there for it to go up, meaning that silver is going to get sold compared to gold. meaning that a lot of speculation is going to leave this market. So these stocks can get cheaper. That's good news. If we look at the gold to SPX ratio, so the gold to the general equity markets, right, we can see that we have been in a support zone, or well, a box right there. I'll make it bigger for you guys. We broke out, stating that gold was starting to begin the big run that we are all anticipating, but we are being held down once more. So we have to be a little more patient, it seems. But things have definitely started moving. Things have definitely started moving. Dryden's up where I live, on the other side of the border, Rainy River, gold to the west. Oh, looks like we got some insights here, huh? Can you tell us a little bit more about that area? What's going on? Is it well populated? What's happening? You see trucks moving, you see a lot of activity happening there. Let us know, let us know. Those are the insights that you can only get on a channel like this, huh? I wanted to talk about Bitcoin too, because in the world of finance, there is one very ugly dragon that keeps rearing its head, and that is Bitcoin. And I don't like Bitcoin personally. I made some money in it in the past, but that was when it was just starting out. I remember Bitcoin from the dark web back in the days. You know, you were surfing, and then all of a sudden you get to the Silk Road, and then all of a sudden you can buy every single thing that you could ever imagine. Unfortunately, didn't buy, you know, a stack of Bitcoin back then. Life would be very different if I did, but it grew out to be this currency. And it grew out to be this this big thing. I believe Bitcoin is going down pretty soon, and the main corporate in that is going to be Michael Saylor and his strategy fund. If you guys didn't know, Michael Saylor is a man who's bought, you know, a whole bunch of Bitcoin with other people's money, and he has a scheme going where he pays people a lot of dividends to hold a perpetual equity that he raises, and he raises money on that, and with that money he buys Bitcoin, and with those, you know, profits that he gets, he pays off the interest on his stock. Sounds like a Ponzi scheme, kinda looks like a Ponzi scheme, but it is a thing that is in the form of collapse right now. And Michael Saylor sold some Bitcoin, and that triggered this sell-off right there. But I was looking at this chart, right? And I am a very basic technical analysis. So I know the basics. And I want to ask you guys if this looks like a head and shoulders, right? It's kind of sloping down, but we got a shoulder right here. Then we get the head. Then we got another shoulder right there. And with a head and shoulders, it usually plays out that the move from the head to the neckline is repeated once the neckline breaks, which is where we are about now, about 60K. And that would bring us back to, that would bring us back to about 30,000 in Bitcoin. That would mean that Michael's strategy would blow up. That would mean that a lot of young kids, right? Because my entire generation is invested in Bitcoin if they are in finance, right? I tell people that I have a little YouTube channel talking about some finance. Always the first question that comes up, oh, you're talking about Bitcoin? No, I'm not talking about Bitcoin. I'm talking about gold. And nobody knows what gold is, but everybody knows what Bitcoin is. Well, I think that is going to change once this chart breaks down. But, you know, a couple bad things here for Bitcoin. I believe that, you know, this undervaluation that we are experiencing right now in these gold and silver stocks, I believe that Bitcoin is a big part of that, because it definitely stole the light from gold and silver. But just gonna get some water real quick. And for all the bad that Bitcoin has done to society, right? For all the gambling that it has introduced into young people's minds, for all the people who've lost tremendous amounts of fortunes in this market, there is also a good in this, because over the past, let's say it's 6 years, a lot of people in their early 30s, their late 20s, have really experienced what this fiat money system is like. And a lot of us people, we're all pretty smart and we're pretty astute to what's happening in the world. We're pretty up to date with everything. You know, we're on our phones all the time. Everybody's collecting news on social media websites. So we understand what's going on. But people understand that the money system is fundamentally broken, right? People understand that this fiat money system, it doesn't work. It creates a lot of leverage to have money. So that means that the rich are always going to get richer as a result of the system that we're in. Now, there's nothing inherently wrong with that, but people want to get out of that system. Well, that's fine. And a way traditionally how people got out of that system is through gold. They accepted gold as a form of money, and that stabilized the currency. Well, people don't really believe in gold at the moment. All of the kids that have learned about monetary policy, that have learned about inflation, that have learned about money, all of these kids have been attracted to Bitcoin because that's the internet money. That's their form of money. I think that all of them are wrong. Eventually, Bitcoin is going to crash. Eventually, Bitcoin is going to go to zero because it has no intrinsic value, right? It is simply an idea that's out there that has gathered a lot of attraction, right? That's how I look at it. And if Bitcoin falls, there is no material reason why it should go up. But a lot of people still believe in it. A lot of people have bought into this myth that Bitcoin is going to be money in the future. Well, that entire myth eventually is going to blow up. And all of these kids are going to lose a tremendous amount of money. Unfortunately, that is how I see it. But what good did that bring to the world? Because, you know, it has to bring something. Well, all of these kids know about monetary policy, so the switch from Bitcoin to actual gold is a lot easier to make than the switch from fiat to gold directly, right? Bitcoin kind of introduced the idea of a new money system. And I really like that. I think that's very good for the gold market, for the mining sector as well. Because all of these kids already know about monetary policy. And once this Bitcoin blows up, you know, I believe that there's going to be a lot of capital that moves from Bitcoin into gold, into silver, into these mining stocks. So that is kind of what I'm waiting on as well. That is why I follow the Bitcoin chart. That is also why I follow MicroStrategy, or now strategy, because all of these things are related to each other. And there's really the difficult thing about doing this kind of analysis, right? Because everything is related to everything else, and it's all like one big story that's playing out. Maybe that's also why, you know, these daily price movements in gold and silver don't really bother me so much, because if you understand the bigger picture, you understand why the price of gold and silver drops like 10% on some days, right? You understand that it doesn't really matter. But, you know, I talked to John McIntosh the other day on the phone. It was a long conversation, was a lot of fun. We talked about a whole bunch of things, but one thing that we talked about was the call options in the gold futures, right? There's a lot of people betting right now on $20,000 gold somewhere in December. Well, if that happens, you know, that has untold consequences for all of us, of course. But, you know, there's people betting on a revaluation of gold. So, you know, if we're talking about valuations, right? If we're talking about things that should go up and things that shouldn't, right? Gold should go up. Why? Because it's very undervalued, historically speaking, right? Towards the general equity markets and the amount of money that's been printed in the last couple of years. But one thing that shouldn't go up is Bitcoin because it has no fundamental value. So it's all about, it's all about fundamental value. It's all about understanding what something is worth and what it is valued at. Regarding capital flows, the weekly gold to Nasdaq 100 chart also looks interesting. Let me see if I have gold over Nasdaq. I think I don't. Let's see, gold over Nasdaq. Gee, yeah. You see, a chart like this, we are in the bottom valuation, right? For gold compared to the Nasdaq. We are in the bottom of this chart. There's only a couple times in history where gold has been as cheap compared to the Nasdaq as it is right now. Right? How can you tell me that gold is overvalued if you look at this chart, right? How can you tell me that gold miners are overvalued when gold miners are cheap compared to gold and gold is cheap compared to every other asset class in the world right now? You know, it's insane. It's crazy. It's crazy. And thinking about even selling a single stock on a day like this, it's, you're just throwing money away at that point, honestly. Like you deserve to lose some money if you do that, in my opinion, because it's so obviously cheap right now. And I'm talking about these stocks in general, right? There's probably stocks in there that are extremely expensive. It's your job to find out which one of these is cheap and which one of these is actually valuable. But, this is gold over the Nasdaq, right? So this is a spread relationship between gold and Nasdaq. And you can see that we're not even close to even beginning a real move in this. But that is also, of course, right? That is also because the Nasdaq is in the biggest bubble of our lives, right? That isn't because gold is so cheap, right? Gold has gone up 100%, whatever, 150% over the last couple of years. But that is also because the Nasdaq, it's so high, it's smoking drugs that haven't even been invented yet, This chart is so steep that it might just fall over backwards. This is it's getting to a point where it's just off the charts how expensive this is, right? And next week, the IPO is going to come from SpaceX, so we're going to rob a lot of people from a lot more money. That's what happens at these stops, I guess. People are just... Karim, I'm going to smoke that, hell yeah. Yeah, who knows, if they revalue gold to 20 grand an ounce, then all of us could. Najing, during the Vietnam Wars, Vietnamese escaped as boat people, bringing only gold with them into neighboring countries. They got a small piece of gold in exchange for essential goods. Yeah, and that's the value in gold. And people say that you can do that. I don't want to be ranting about Bitcoin too much, but, I got to take every opportunity that I get to get people out of Bitcoin and into gold because, But people say that you can do that with Bitcoin as well, but I don't really believe that. Gold is something so physical, it's something so valuable that even with a small piece of gold, right, even with a single ounce, you can cover your monthly expenses. So if you have to flee the country or if there's war or whatever, Hey Simba, good to see you. Welcome. If you have to leave the country, you can take a couple ounces of gold with you and then just leave, right? Anyway. The Nasdaq, man. It's so crazy. But yeah, this was really, as I said in the beginning, gold and silver really are just roadkill at this point, right? They are not the drivers of the move. They are simply, the carnage that is left because the real move was in the Nasdaq, minus 4.7%, and the Nasdaq is so big that this is trillions of dollars that are being wiped out from people's portfolios. But the real moves were in the Nasdaq. They were in Bitcoin, right? They were in Nvidia. They were in Meta. They were in Tesla, right? These stocks move and the rest of the market follows, right? So unfortunately, at this point, still gold and silver are just, being dragged on a leash by these bigger stocks. But these bigger stocks, they are going down because the AI bubble is collapsing, And I can see that there's a lot more people viewing right now than there were before, so I want to reiterate this point again. But the AI bubble is collapsing because the AI bubble was being held up by all of these big tech firms, right? I'll show you the names. Nvidia, Microsoft, Google, Meta, Tesla, Amazon. All of these companies were spending a tremendous amount of money building out data centers. And they were buying stuff from Nvidia. But as we've seen the last couple weeks, is that these companies are running out of free cash flow to fund these data centers. And so they are starting to sell stock. They are starting to sell shares to the general public in order to raise more money to build out these data centers. So that means that even though they've invested hundreds of billions of dollars into these projects, into these AI tools, they haven't seen a return. They can't fund themselves. And now they need to dilute their shareholders in order to extend this AI build out. And that is such a dramatic shift in the whole in this whole market that is driving these stocks down. And because these stocks are going down, gold and silver are being sold as well. And a lot of people are looking at that thinking, oh shit, the trade is over. Gold is going to go down. Silver is going to go down. I don't know why I hold my stocks anymore. I am going to sell all of my stock. And that's why you see such a violent move in these stocks that is unwarranted, in my opinion. But if you are in this market, you are definitely taking advantage of that. So that's congrats to you. I don't really know what I Yeah. All right, I think that's about enough about these all of these stocks, huh? All of this bloodbath. Hey, somebody was talking about a stock that they wanted me to look at. Let me see. Nana from Malaysia asked me to look at Borealis. All right. So yeah, for the people who are just joining, right, you can go back into the stream. We just looked at the moves in gold and silver for a little bit. I'm going to start to look into some mining companies right now to see if we can find a potentially good investment, right? Because at the end of the day, we're here to invest our money. At the end of the day, we're here to pick out good mining projects. Gold can go up, silver can go up, but if you're holding a shit company, you're still going to lose money and management is still going to dilute you out of all your potential gains. So, much more important than the price of gold and silver is simply what you put your money in. And that, at the end of the day, is what you want to be focusing on. Let me just set up a couple things here. All right. So this is Borealis mining. And they say it's a high-grade exploration potential located in the world's top-rated mining jurisdiction, which is, I believe, either Canada or America, the US. But it is host to a Operational ready gold mine. Whoa. The project has 600,000 of ounces of gold historically in its heap leaching facility and contains a significant endowment of unmined gold. All right. That sounds pretty good. So they seem to have a mine already, right? The kind of projects that I like in this market right now, and I've kind of spoiled my portfolio for you guys, right? If I'm going to be honest, I wanted to put my portfolio behind somewhat of a paywall to show you guys what I personally invest in, right? I wanted to do it behind a membership on my Bring Me a Coffee page or Buy Me a Coffee page, but I kind of spoil it already, so I kind of messed that up for myself, unfortunately. But you can go back and stream and watch my portfolio. But what you'll find in my personal portfolio is that I have a lot of near-term operations in my portfolio. I have a lot of developers because at this point, development stories are extremely cheap, right? Because we looked at this. We looked at this last time, right? The Lassonde curve. Open in a new tab. Horrible image, but you'll get the picture. This is the move in the stock price, right? I don't want to be in this part of the Lassonde curve. That is pre-expiration. I don't want to be in there. I am not a geologist. I don't know what there is in the ground, right? That's this part of the Lassonde curve, right? The extremely cheap stocks, the $50 million market caps, the money raisers, the drillers, some people without a resource. That's like going all in blind on a hand of poker without seeing your cards. You know, that's betting. That's gambling, in my opinion. The ground could be as prosperous as anything, as prospective as anything, but you know, there has to be gold or silver there before it's valuable. Now, the second part of the Lassonde curve, right, this very steep line in the curve, that's when people make a discovery. So if you look, for instance, at like a snowline gold, this is a good example of that. So this was the part before they really had their discovery. And then afterwards, when we really knew that there was a big discovery there, that there was a lot of gold in their deposit, you can see that the stock really shoot up pretty dramatically afterwards. But after that point, people understand that there is a deposit there. So people understand, all right, this is a very valuable play. We've all piled into this, knowing that there's a deposit. Now, this part of the Lassonde curve, after the deposit, that's where the real boring stuff happens, right? That's where people are going to go in and they're going to look at the deposit and they're going to think, all right, is it economical? How do we mine this? What is the infrastructure going to be like? Are we going to be able to get the permits? The permitting process takes about 10 years at this point, so that is where this part comes in. And the stock price goes down, right? The value of the company goes down. Why is that? Because a lot of money needs to be spent on a lot of research for this mine, right? And in that research, it could be that the mine is not really economically valuable after all. You can have a really big deposit, but if it's not accessible or if there is too much sulfur in the ground, right? As with a stock that we looked at a couple months back, Highcroft Mining, I believe. You know, there are a couple things that could ruin that could ruin your potential mine. So that's where this part of the Lassonde curve comes in. This is the permitting process. This is the engineering process. Takes a long time. It's very boring. People don't want to wait on that. So they are chasing other opportunities. They are selling the stock and the price goes down. Now, this part of the Lassonde curve, right? Also the second big sloping line. This is the part of the development of the mine. So you've raised the money, you've got the permits, and you know what you're going to do. Now you're going to start building the mine. And that is the part where I like to invest in at this moment. Because at that point, I know how much gold there is in the ground, and I know what they are going to be mining it for. I know that they're going to have a big profit at this point, right? Because most deposits worldwide that are getting developed at this point have a ASIC, so a all-in sustaining cost, which means just the cost to mine it and to replace the ounces that are in the ground. Just that cost of about, I see a lot of companies doing it for about $2,500 gold. Gold is about 4,500 right now. So on every ounce that they mine, they have a almost 80% profit margin. That is extremely good, right? So if you get into production right now, you are extremely valuable. So a lot of these development stories are going into production. And that's where I want to be. I want to know how to value a company. I want to know that it's cheap. And I want to know when it's going into production. Because at that point, right, that's the top here of the sound curve. That's when you get into production. That is the most valuable moment in a mine. It's the first day of production. That's where I want to be. And as I look around in this market, right, and as we are probably going to see with this company as well, Borealis Mining, we will probably see that it's potentially pretty cheap because people don't care about development stories right now. For some reason, they either like exploration or extremely big mines, but they are kind of overlooking the developers. And you know, if people are overlooking it, that means that it's cheap, and I want to take advantage of that. Coasty, you mentioned Goliath Resources at the start. Can you give us your opinion on that company? Sure. I own Goliath Resources. I have owned it for a while now. Let me see, Goliath. A very interesting stock. I've owned it from like way back, from like 2021, somewhere 2022. Owned it at about 80 cents when they just had their sure bet zone. Now they got a whole bunch more zones, and they got a whole layer of things that they've hit. I like the story. It is an exploration stock, so this is the one of the only exploration stocks that I own. It is risky in the fact that it is exploration, but all of the holes that they've hit were successful, right? They've had some very big results, and this is a small position for me because as much as I say that I like development stories, right? As much as I say that I grew my portfolio to be more into developers, there are some stocks that I hold from a time where I invested differently, and this is one of them. I like it. I own it. I would love to know what their resource is going to be. I don't know when they are going to come out with it, but if they are, I'm definitely going to look into it. The only thing that I got about it, it's pretty cheap still, right? 266 million ounces or $1 million bucks. So if we if we are going to roughly calculate how many ounces of gold Goliath needs to have for it to be cheap right now, we can see that it's about 200 million bucks right now, US. An ounce of gold. All right, let me just get some Excel in here. Right, so we have a stock that's worth about 200 million bucks right now. Gold is 4,500 bucks an ounce, right? I know that a lot of these exploration stories right now, for the risk that you take in this exploration and for the fact that there is not a resource yet, I would like Goliath to be trading right now at about 5% of the gold price. So that is, sorry. So that is about 225 for an ounce of gold. So they would need to have about 1 million ounces of gold in their deposit right now for me to consider them cheap, right? Because you have a deposit that's worth, or a company that's worth 200 million. If they are trading at 5% of the gold price, then that would mean that they would need to have about 1 million ounces in the ground right now for this stock to be cheap. So the only question that I have for Goliath resources right now is how many ounces do you have? Is it more than 1 million? Then I'll keep it. If it's less than that, then there's going to be a big sell-off. And that is the risk that you have with these kind of companies, right? And let me highlight that risk by looking at Newfound Gold. Newfound Gold, extremely hyped up stock, just like Goliath Resources, by the way. Goliath Resources was very hyped in right here, right? Goliath Resources was very hyped up all the way from $1 to about $3.50, right? And afterwards it completely collapsed. So maybe a good time to get in now if you want to take some risk. But with Newfound Gold, this is the day that their resource came out, right? And you can see that the stock opened 30% lower, right? That is because people thought that Goliath or that Newfound Gold had a lot more gold than it actually did. It was pricing in that this stock would have 4, 5, 6 million ounces of gold. Well, it actually only had 1 or 2 or whatever, a lot less than that. So it drops, right? And that is the risk that I run with Goliath Resources as well. If they come out with a resource that's less than at least 1 million ounces, then I'm going to lose 50% on that portfolio or on that position. And I should not get it back, right? That's a permanent loss because the value is just less than what I paid for it. But for some reason, and I can't really explain why, I think that they have a lot more gold than 1 million ounces. We'll see. I think it's pretty high grade as well. I like the position. I still got it. It is a gamble for me though. But I could look into it a little bit more if you want to. But let's get back to this story. So we're talking about a operational ready gold mine, right? With 600,000 ounces in historical production, right? And they say that they have a significant endowment of unmined gold. All right. So their objective, advance drilling. All right. Execute exploration near known mineralization. All right. So they want to increase the amount of ounces that they have in their reserves right now. I'm sorry for the coughing. I've been very sick this entire week. Please excuse me. Capitalize on permitted gold production while advancing exploration. Preparing and permit for operational, aiming for 100,000 ounces of it. All right, so they still need a permit, which means that they cannot go into production yet, right? So to pass the time, they are drilling right now. Of course, permitting always a big issue in this industry. Only a couple permits every year get granted, and if you do, you make a lot of money. But if you don't, then you have to wait, and you have to dilute your shareholders for more money. Right, so past producing mine, as you can see here, this is a picture of a open pit mine. You can see that it's an open pit because it's a big hole in the ground. It's a pit that is open, I really can't make anything more clear than that. But you see that it's pretty old, right? Just as the view of this, the scenery, it's overgrown. The pathways that the trucks used to drive aren't clear at the moment. So this has been producing a while ago. So I would love to know when that was and what they are going to do now. All right. So let's go to the projects. We would like to see that. We would like to see the board and the management. And I would like to see the financial results, the investor page. All right, let's first look at the project. It's a 100% owned and fully equipped for present mine operations and future expansions, access, workforce, power, water, and permits. I got no clue what that sentence means. There's a lot going on there, but sure. I do believe that with the future expansion, They mean access, workforce, power, water, and permits. So that means that they still need to make access roads. They need to make a power station. They need to make their water treatment plants, and they need to get their permits. As basically a lot of the infrastructure needs to be built. A lot of the key parts of the infrastructure need to be built. All right. Project highlights, permanently heap leach. Heap leach is nice because it's cheap, right? It's good for gold recovery, so that is good. So they have permits for the heap leach and they got permits for the mine, but then what permits are they still waiting on? That is the question. Okay. Oh, they say here minor production recommended. So they've produced for 2 years in 2021 and 2022, and afterwards they shut down. Let me see. What was the gold price back then? So they were mining when gold was about $1,800 an ounce, right? And then gold dropped to, let's say, 1,600. And this is about where they stopped mining, right? So they were mining in this area right here. 2021, 2022. So they've missed this production, and it seems like they are motivated to get back into production at some point to capitalize on these higher gold prices. Of course, that's what anybody would do when they own a mine. So, location 2 hours drive from Reno, Nevada. All right, 25-minute drive from the town of Hawthorne. Let's see where that is. Damn, that's a cool gun. What the hell? Imagine living in America, man. Imagine living in America and just seeing this kind of missile launcher just in your city, man. It's unbelievable. Unbelievable. So it's about in this, right, in this area right here. Somewhere right here. We have a reservation. So if it's anywhere near this, then it's a no-go because this is a reserved area. All right. They got some land position. They got some infrastructure, electricity from a grid, permitted water. All right. So they need to build a couple more. Reno, it's down there. Let me just try to pinpoint where this is, yeah? It's about there. They have a operation about here. All right. Let me see. What is the resource, man? Why are you playing with me like this? Where is the resource? All right, this is the production facility. This is the resource. Let's get rid of that. Let's make this bigger. So this is a 43-101 technical report, project status. So for the people who don't know and who don't read these reports for fun, you know, a 43-101 is a Canadian exchange requirement to produce some data about your project. So in these reports, the mining companies state what the status is of their current mine at that time in history. So usually these reports come out every couple years, 4 to 5 years, something like that. And they could contain a lot of info about the deposit, about the state of their permitting, and about the state of their infrastructure. That's what I usually look at it for. But these 43-101s contain a lot of information. So if you are looking at a project, right? And if you are looking at a potential investment, always look at these reports. And you need some time to get familiar with them. But you know, as for right now, I want to look at the mineral resource estimate that they got. So that would be right here, the MRE. And they say numerous mineral resource estimates have been completed on the project by previous explorers. These estimates are not considered current. All right, so they can't use the old resources. So they are working on their own one right now. That is unfortunate because I would love to know how much gold there would be historically in this project, but maybe we can find out. Maybe we can find that out. Let me show you guys how you find out what a historical resource has been. You want to look at the ownership, and that would be property description and ownership, right? Property description, you get an outline of their project, right? So you know that this is the project that they control, the black lines. Then we go down and there should be a list of previous owners, right? And I'm just going to skip through this a little bit because I want to know what the latest owner was before they sold this project to BLM. And stake by Golden Phoenix, Griffin, or right. So what I read here is that the property that they own right now has been owned by two different parties before, and it was owned by Golden Phoenix and by Griffin. So unfortunately, oh, Sitter Plus is online. Unfortunately, the Canadian exchange website is still down. This has been the 4th week that this website is down. This is horrible. But unfortunately, we can't look this up. But what you would do in this situation, knowing that the ground was previously owned by Golden Phoenix, right? You would go to the Sadar Plus website, and then you could see for all of the reports that Golden Phoenix has brought out. And there should be a report with a 43101 stating the mineral resource for this property. But unfortunately, right now, we don't have a resource for this property. So we don't know how much gold they have in their flagship project. Maybe in another project, we will know. So this is another project that they own, the Sandman project, and they say that they have near-term production potential for 38,000 ounces per year of production for 9 years. That is a small producer with not a lot of ounces, not a lot of years on them. But what a mine like this, what a mine like this does do, it gives the company operational capital to invest in their other mines. And that's what I like about producers, right? You can start with one small mine, and if you build that, then that can give you the cash and the resources to build a bigger mine in the future, right? So I like that story. I like that play. I like the fact, I like it when companies get a small mine, get it into production, get the experience from that, and they use that capital that they gain from that to build a bigger and better mine, right? And then keep evolving that to eventually become a bigger company. But they say that it's that they have a PEA and that it's production near production. So the PEA shows 200 million net present value at a 100% rate of return at 2,600 per ounce of gold. So that would mean that it has a tremendously big return at $4,500 gold. So if this gets into production, they can fund their other projects. I really like that. That's a good sign. That's a big plus for me. Low capex, that's good. Initial capex, 36 million bucks. Whoa, 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 whoa. That is really, really low. You know, there's probably some people in that market, in this market, that could just fund this personally, you know? But damn, that's a very big plus for this stock for sure. Right, so this resource currently have 433,000 ounces of gold. All right. Question: when is this going into production? When? You can have a good project. You can have low capex. Do you have the permits? Do you have the infrastructure? Do you have the knowledge? When can we start? That's the only question about a small project like this. I don't really care where it's located. I don't really care about the exploration potential. When can you start? Speed is important with these smaller projects. So they got a technical report as well. Right now, we know it's a small mine, low capex, right? So it's not a very interesting project for the funding or for the valuation of this entire company. What we want from a small project like this is that they get it into production quickly so that we can use the cash to build out the other bigger mine. So what do we want here? We want to know about the permitting. We want to know about the permits. 4.6 permits required for conducting exploration. No. Permits required for conducting mining. There are no known however detailed assessment of mining activities have yet to be conducted. This is planned in the next phase as work as part of the pre-feasibility study or the feasibility study. All right. So, however, detailed assessments for mining activities at the project have not yet been conducted or have yet to be conducted, right? This is planned the next phase of work as part of the pre-feasibility study or the feasibility study. Right, so unfortunately, they haven't really started the permitting process yet, it seems. Standard baseline studies will be required to more accurately report water table and for permitting. All right, unfortunately. The environmental studies performed in the past did not identify any issues for significant concern that would materially impact the ability to secure the permits needed to develop the project deposit. However, these studies will need to be updated to support the permits efforts for mining at the project. So they need to do water permitting and environmental baseline permitting. Both of these things take a couple of years, unfortunately. This report has been from, when did they do this report? 2026. So there is some time between now and the production of this smaller mine that they got. Unfortunately, I would have loved it if this smaller project was construction ready, was permitted and was ready to go, because then you can really use the momentum of a project like this to build out your other project. But unfortunately, there seems to be some work that has to be put into this project. I'm very sorry about all the coughing. But there seems to be a lot of years that need to be put into this project before we can even talk about this project, because this project doesn't have a resource yet that the company has produced. So seems to be a little bit further away from production as we first would think. But they have a third project, the Big Balds project. Sorry, sorry for all the bald people in the chat. This is not meant for you. This is simply the name of their project. It's called the Big Balds project. Maybe that's what they call you at the bar. Hey. Let me see. So it's located west of the Bald Mountain Mine, which hosts some gold. All right, sure. AJ Walls, they named it after me, apparently. I'm sorry, I shouldn't be laughing about that, but that's a funny joke. All right, smaller project right here. Let me see what they got in their investor deck. What do they have in their presentation? What do they have to say about these two projects that they got? Let me just zoom this in a little bit. So here they say that their Boleris mine is actively producing gold and it's fully permitted. But on their website here, they say that they've been in production in 2021 and 2022 and that they still need to make, where was it? And that they still needed to make some form of infrastructure. So I'm unsure right now what the current status is of this project, whether it is or it is not yet in production. But, you know, believing the slide deck here, they have one producing mine, which is producing, which has a historical resource of 1.8 million ounces of gold. So there is the resource. And they have a development project right now, which has another about 500,000 ounces. Very good returns on that if they can get it into production. However, it's a small mine. So talking about the stock, they have about 150 million shares outstanding. They got some warrants, not too many. They are worth about 177 Canadian. What are they worth right now? Short-term memory is really short at the moment. Borealis. Let's get into the... No. Let's get into this one. All right. Let's get daily movements. Stock dropped 10% yesterday. That's pretty good if we're looking at it today. It's about 150 million Canadian. So that is up to USD. So we have 150 Canadian. So it's worth about 72 million bucks US right now. That is pretty cheap. So financial highlights: no debt, $21 million in cash, and infrastructure replacements of about 70 million. You're buying this stock right now for 70 million bucks. If they have 21 million bucks in cash, that means that the stock you're buying is actually only being bought for 50 million. That is pretty good if they have an active mine right now and one that they are going to produce in the future. So we can see insiders own 9% of this company. Rob McEwen owns 12%. Eric Sprott owns 9%. So there is backing from good big investors. AJ Walls, all kidding aside, production path to production is an important classification for me. Yes, near-term producers offer a lot of upside. Yes, I agree fully. Almost my entire portfolio is in near-term producers. But the thing is, do they get the permits? That's the biggest question in everything, right? Because they have a project here as well. They got one producing mine apparently. They got one that they want to get into production, but they need permitting. That takes 4 years. That takes, a long time. And that's what you're waiting for. Keijo, hey bro, do you still think another wave of selling is coming next week? I hope so, because I want to buy a couple stocks a lot cheaper than they are right now. So I hope there is a lot of selling. But going back to Belarus, we got two big names in the industry owning big chunks of this company. That's a very, very good sign. That means that billionaires with a lot more resources and a lot more knowledge than you and me are looking at this stock and they think it's worth owning. So two big names, very good. Institutional investors, 36. The smallest part is retail. That is also good. That means that it's not a very liquid stock, right? Because they have a very low market cap, about 70 million. 33% of that is being traded. So that makes for a very volatile stock. And that means that it can go from $2 to 90 cents, right? That means that it can be cut in half, right, in a couple months. But, you shouldn't be too worried about that. You should be celebrating that because that creates a lot of opportunity. All right, board of directors, real quick. Do I know any of these names? Right, so the board of directors, Bob Buckham, he is the founder and CEO. He used to work for Kinross. All right. It's pretty some interesting names here already, huh? Does this mean founder and CEO of Kinross Gold? Wait, does that mean that this guy was the founder of Kinross Gold? I see that my camera is frozen. Give me 2 seconds and then I'll be right back. Hey, we're back. I'm sorry. These are the things that happen when you're doing live streams. Things can just happen. But hold up, wait a minute. This guy, Bob Buckham, as you can see here, is the founder of Kinross Gold. What the hell is he doing in a $70 million stock? All right, this just got very interesting. All right. So the founder of Kinross Gold is in here, together with the co-founder of Next Gen Energy, Richard Patricchio. Together with the vice president of corporate development in McEwen Mining. Together with the past president of Sprott Mining. Wait, what are all these people doing here? Wait, okay, all right, I'm interested. I'm interested. Right? That's enough big names for me to be very interested. All right, what are all these people doing in here? The president and the CEO is the past exploration vice president of Amex Exploration. I own Amex. I like that stock. It's got a great resource. The COO was a senior engineer at Kirkland Lake. All right. I don't really need to look more into this management team. This looks extremely good. Some very, very big names in there. All right. So let's go further. So they are located in Nevada, right? As you can see here. So it's an historical mine that has been producing about 600,000 ounces, is 1.77 gram per ton. That's a pretty good grade, especially for open pit, right? Open pit is very cheap, right? Especially with heap leach. Those are two very cheap processes that you can use. And seeing that they have a grade of about, 1.7% or 1.7 gram per ton, that's very good. That means that it's very profitable. So we're talking about a profitable historic mine that has another mine up and coming that is being managed by a couple extremely big names in the industry. I just got very, very interesting here. And they say that all permits are in place for resumption of full-scale mining. All right, I'm really excited to see their financials at this point. So they have a mineral resource historically, so they can say that they have that themselves, right? They do need to do a new study of about 1.8 million ounces of gold at a pretty decent gold grade. But the resource is from 2011. And they said that they were exploring more right now, so this resource is probably going to become a little bit bigger afterwards. Let's see, high-grade exploration potential. So they got 67 meters of 16.2 gram per ton gold. Whoa, that is pretty good. That is 67 times 16.2. That's 1,000 gram meter hole. That's in the upper tier of drill holes. That's very, very good. All right, so this is just a highlight. So this is their heap leach pad. Sure. Refining process. Let me see, is there something that just jumps out here? Historic recoveries plus recent metallurgic works indicate an expected recovery of about 70% via conventional heap leaching. So the recovery isn't great. 70% of what you mine, you recover. That is unfortunate. I hope that they can get this number up because this will determine their profitability extremely, extremely bigly. If they get this up, depending on how much they have to spend to get that up, this can be a boost in their profits eventually. I wouldn't know how you do that, honestly, but I would love to see this number higher than 70. So they have a current capacity of about 55 to 60,000 ounces of gold per year without any upgrades. And the plant is designed to process external carbon without any modifications. All right. So without upgrading their plant, if they restart it, they get about 60,000 ounces of gold. With the other mine that they are planning to build for another 40,000 ounces of gold, that brings them to that threshold of 100,000 ounces of gold per year production. That's pretty good. That's pretty good. So that's some plan. So what does their resource look like? Let's see, what do we got here? I would love to get this new updated mineral resource estimate, but I'm gonna make this even bigger. We're just gonna take a look at this. So there's a lot of colors right here. Here you can see what they all mean. And you can see that previously mined and backfilled, that's this area right here. That's the gray area. All right. And then here we have the gold that they have found as parts per million. And the intenser the color gets, the more gold there is. So this gives us a kind of a overview of where the gold could potentially be. And you see these drill holes that go into the project, right? And they go in right there, there, and there. So they say essentially that there is a big part of the resource that is still underneath the current pit and next to it, but there's also some gold, as you can see right here, in that backfilling that they've done. So potentially it's going to be a story where they find new deposits and they are going to recycle the old backfilled material, kind of like what Integra Resources is doing right now, where they are mining material, but they are also looking at the recycling of the previously mined material. All right. But, you know, it extends into depth. But I would love to get this this updated mineral resource estimate, because that's really where the juice is for this story. The Sandman project. Yeah, we just looked at this, right? This is another project that they want to get into production. And they say that they have indicated resources of about 400,000 ounces. That's pretty good. At a lower grade, right? So that is important in this. They have a much lower grade than the other project that they have. But they say that they are going to be doing this very profitably, and that is because their capex is going to be very low. But I don't really care about the Sandman project. I really care about the other one. Big bolts. All right. So why us? Why now? All right. All right. All right. So that's enough of that. Give me your financials. What are we doing in the financial world? So to cap it right now, right? To recap it, management team looks phenomenal. A lot of big names, a lot of names that I recognize from other companies that have been extremely successful in the past. The founder of Kinross Gold is on the board of directors here. Well, that, you know, that says a lot about a guy like that being in a company that's worth 70 million bucks right now. Seems like the company has about 2.2 million ounces of gold in 2 different deposits. One of them, they say, is mining right now. The other one, they say they are going to get into production once the permits are ready. That's going to take a couple of years. So this is a development story where one mine funds the other one, and eventually both of them create a cash flow for you as an investor. I like those kind of stories. Story seems to be pretty cheap right now, valued at about 70 million bucks, or at about $150 million Canadian. Let's see what their financials look like. As of January 1st, 2026, is this the latest? Yes, this is the latest. So that is what, about 6 months ago, they had 21 million bucks on their balance sheet. This is not going to be here right now. They just have expenses. You know, they need to be paying a lot of things, so they're going to run through this cash. But they were very well capitalized about half a year ago. They didn't really have that many liabilities, as it seems. Decommissioning obligations. We will be looking into that. But they had more cash than they had liabilities, so that's a very good. That's a very healthy company. Let me see what their revenues were. So they had some revenues. for the 3 months ending in January 31st. So they were mining some gold, as you can see here. Not a lot, $1.5 million in sales, or well, in revenues for a mine. That's not really a lot of gold. But they spent about half of that on their cost of sales, so they had 620,000, let me see, yeah, dollars in gross profits. Exploration, operation expenses, consulting fees, general and administrative expenses. All right, so they were running a loss on that. We are definitely going to be looking at, let me write this down real quick, what we should be looking at. So we should be looking at number 12, we should be looking at number 13 and number 10. As you can see here, exploration expenses, consulting and professional fees, they seem to be quite high, these seem to be quite low. So let's get into that. So this is the sheet where you can see how much they have diluted their shareholders. The balance of January 1st, 2026 and the balance January 31st, 2025. So year over year, you can see that they started with 83 million, right? 253,433 shares outstanding. And right now they have 147,130,615 shares outstanding. So they have diluted their shareholders in one singular year by about 80%. That is extremely, extremely high. So very big point of concern with this stock is the dilution rate, because they have diluted their shareholders quite a bit, right? But they got a mine into production right now. So you would hope that once the new numbers come out, they would be able to fund their company and their further expansion of their projects with that cash flow. And you wouldn't want to be diluted in this stock any further from this point on. Because that is the real reason why development stories are so interesting in this market, is because the cash flow from the mine can run the operation. So, you know. So they got some cash flows, well, negative cash flows. What else happened? What else happened? What else happened? Depreciation, sure. They had some obligations, so they had some debt outstanding, which they did something with. I think they paid off some of their debt, as it seems right now. They had some share-based compensations, 432, so we're also going to look at that, number 7. All right, so they lost about 5.4 million in those 6 months. And they financed that by doing some financings. All right, so first point that we're going to look at, number 7. Share capital, warrants, and options. So they have outstanding share capital January 31st. All right, so this is year over year. Exercise of agents, options, exercise of issuance shares of cash. You can see that they have been increasing their amount of shares, right? Even from July 31st, right? So in half a year, you can see that the dilution really is pretty static in here, right? They've diluted about 30 million shares here for cash and for a transaction, and right here as well for cash, right? And some warrants that were exercised. Unfortunate, really unfortunate for this stock. We wanted to look at point 10 as well. Related party transactions. Related parties are defined as management and directors of the company and members of their family and or other companies in which the board member or senior officer is a owner or a senior executive. So this is money being paid to the management, to the family of the management, or other companies that the management is involved with. So quite a large range of people who can receive money from this company. But you can see that the company pays the management. You know, every 3 months they pay it about, what is that, about $400,000 a year, and it shoots up sometimes. But they pay themselves pretty well. All right. And for that payment of that management, you get some exploration expenses. But as you can see right here, they didn't spend any money drilling, right? They just spent their money on personnel, on consulting, and on the claims that they are staking, which means that the management is paying themselves, right? They are not generating any profits from their mining activities as of the 31st of January 2026. But you know, management is still collecting fees, but that's just how this business works. And then we wanted to look at the operating expenses. All right, so a couple questions for this stock right now, you know, because we have pretty old information about this company, right? We have a historic production profile, we have a historic mineral resource estimate, and we have a 6-month-old financial statement. So that's pretty old. Both of them are pretty old. But the story of the stock is pretty good, I would say. We're talking about a story where there is a very seasoned management team with extremely big competence, which has a producing mine and a development story, but they are diluting pretty heavily in this stock. Right now, the stock is trading at about 150 million Canadian. Which is about 107 million US. That's what I thought. I thought that 70 million was a bit low, which is about $107 million US, which is pretty cheap, right? If we look at this stock, the company says to hold about 2.2 million ounces of gold, which is worth right now about $9.9 billion, right? So if another company would come in and they would buy this company, they would pay about 15% of that, I believe, and they would pay about $1.5 billion for this company. It's trading at about 150 or well, about 100 million bucks right now. So the company is very cheap. But why are they cheap? They are diluting their shareholders pretty heavily. And up until the mine that they run is profitable, up until that production number goes up and they make more money, this dilution is probably going to continue, right? Because they are diluting because they need to pay expenses. Unfortunately, that is the story of this case. So definitely very interesting, and maybe at this price even worth getting a position into, because it's another producer backed by very big names. I like that. I'm gonna put it on my watch list. And I'm gonna put some comments on there. New mineral resource estimate, new 43-101 for the so I would like to get into this stock, I believe, because I need to do a lot more research, right? This is just the first look into it. But putting it on my watch list, I'm waiting for the new mineral resource estimate. I'm waiting for the updated statements that they can give me on their flagship project, and I'm waiting for the last financial statement. And in particular, in that last financial statement, I want to know, is there still 80% year-over-year dilution? Are they raising the current production profile, production numbers? Is the mine profitable? And what is the cash position? That is what I want to know before getting into the stock. Without all of this information, I do think it is pretty, you're flying dark, right? If you don't have the latest statements, you're flying dark. I kind of want to know what I get into when I get into something, so I'm just going to wait for that a little bit. The stock is cheap right now. Stock could double compared to their deposit size. It would still be cheap at that point, so I'm not in a rush to get into anything, especially since right now we get a 50% discount from prices beginning of this year. So, But if I would get into something new, that would mean that I have to sell something else or take a profits from that. So I'll have to see what I can get out of to get into something new. But it's definitely on the watch list. It's definitely very interesting. Thank you for the tip, Nara. Thank you, thank you. All right, so I got about 30 minutes to an hour left before I have to get moving. Which other stock do you guys want to go into? Which other stock do you guys want to see? Lanaton Gold Corp. All right. And maybe if I'm coming back to this in about, let's say, a month from now to see where we are, and then we'll go from there. Maybe I'll take a token position, a small position in this stock. We'll see, we'll see, we'll see. I'll let you guys know what I'll do when I do it, but yeah. Very good. Lanaton Gold. A lot of stocks in Nevada. Yeah, a lot of these companies are in Nevada. So, I'm gonna keep saying it. Can we stop with these mailing lists? It's not 2005 anymore. Nobody wants these mailing lists. All right, so it's an open pit mine, right? As we can see right here. It's an open pit, previously producing in Nevada, as somebody else said, in the desert. Looks pretty cool. Lanaton Gold is a Canadian mine development and mineral exploration company that holds, through its US subsidiaries, 4 top-tier gold and silver exploration projects in the Walker Lane of the mining-friendly Nevada. All right, 4 projects in Nevada. And they say that they are developing at the moment. So they say that they have a flagship project that has past production of 350,000 ounces of gold and 780,000 ounces of silver. That is the production numbers. What do they have in their mineral resources? They say that they have 1.5 million ounces of gold equivalent. In their indicated category, and they have inferred ounces of 411,000 gold equivalent. Grades are pretty low, sub 1%. Size is decent, about 2 million ounces equivalent. So size is good, grade is a little bit low. If it's open pit, it's doable, but if it's underground, it's definitely a no. The company plans to continue advancing the Santa Fe mine project towards production in 2025. All right, so the website is old. While drilling York and Slab to test its satellite in West Santa Fe. All right, so the company hasn't updated their website since at least 2024, right? Because they're talking about 2025 in the future. That's a bad sign. Pretty small website too. I forgot to look at the latest press releases from Barillas Mining. I kind of want to look at that. I'm sorry. This is in the Netherlands we say van de hak op de tak, right? Which means that you're jumping from different subjects, right? But I completely forgot to look at their press releases. But I definitely want to look at Borealis's latest press releases to know, since their last financial statements, what are they up to? What are they doing right now? What is the latest news? So bear with me for one moment, and then we are going to go back to the Santa Fe project. Where can we find their press releases? Right, so their latest press release was from, or their latest results, right, their financial statements were from Q1. So this $20 million bought financing was part of the financial statement. But since that financial statement, they say that the Borealis mine announces first production blast at the gold mine in Nevada. That's very good. They have announced an updated 43-101 pre-economic assessment of the Sandman Gold project. All right, so we have already seen that. Reports Q2 financials. All right. This is what we want to see. All right. And they have announced that Sandman Gold project is advancing towards development with initiation of detailed engineering, permitting, and technical works. All right. So give me the numbers. Financial highlights. 3 months ending in January. This is the same financial statement as we looked at, unfortunately. I thought this was the latest one, but this is just the same one. All right, so no new info here. Sandman Gold project. They have initiated the detailing, engineering, permitting, and technical work programs for their Sandman Gold project. All right, unfortunately, no real news since the last financial statements. But since the last financial statements, they have been producing more, so you can expect more revenue and hopefully, oh, I'm sorry, I was watching something else, but hopefully we can see more revenue and more profits. But going back to La Hontan Gold, the Santa Fe mine with 4 exclamation marks. With 4 exclamation marks. They're really excited about this. They're screaming from the top of their lungs about the Santa Fe mine. If you guys need me to make a new website for you, La Hontan Gold Corp, please contact me. My email information is silverlininganalysis@gmail.com. I will make a new website for you that looks slick, that is up to date, and doesn't use exclamation marks when you are talking about your own project. Because this looks pretty corny. But talking about the project itself, they own it for 100%. That's very good. Have about 2 million ounces gold equivalent. That is pretty good. 2026 work plan. For 2026, the company plans to continue optimizing of the Santa Fe mine plan, resource expansion drilling, and refining the metallurgy flow sheet in advance or in parallel with our permitting activities. All right, all right, all right. So they're working on the permits, they're working on the optimization of it. Geology, I can't really say anything about that because I'm not a geologist. Exploration targets. So they have this project right here. And I can imagine that this is the main pit that they are working in, and this is going to be the satellite deposit, as they talked about. And they have some more exploration targets that they want to look into in their property. All right. And the different zones that they have are subject to different net smelting royalties. 2.5% and 1.25%. Okay. So in connection to royalties, the company might own some debt. And I would love to know if that is the case, because an exploration company with debt is a recipe for disaster. They say that they've been a past producing mine, open pit, processed by heap leach. Reported recoveries were about 70% for the gold and approximately 30% for silver. Ooh. They have some recoverability issues with the silver here, so that is something to keep in mind. If a lot of their ounces are in the silver category, that is going to be a problem because 30% recovery is just not going to cut it. And the fact that they keep talking about gold equivalent ounces tells me that there might be a little bit gee, I'm sorry. But it tells me that there might be a little bit of a problem right there. Otherwise, they would have stated it differently. All right. Damn, I thought I had enough water today for this entire stream because I'm coughing so much because I'm sick, but I don't have enough. I'm gonna go get some water. I'll be back in about 2 minutes. So just enjoy yourself while you're here. I'll be just back. All right, all right, all right. We're back. I got some more water. Got some more water. We're ready to do another one right now. So as I was saying before this little break that we took, the company is saying here that they, or where was it? Where was it? Where was it? They say that they've been past producing, right? And that they've had some recoverability problems with the silver in their project. And they are talking about gold equivalent ounces in this project. So they aren't talking about the silver much. So one of the questions that comes up in my mind right now instantly is, are they having a lot of their value in this property from the silver? Because if they do, it's going to be a little bit of a problem. But let's just look into that a little bit more. So they did a 2024 drilling campaign, which got some hits, but nothing spectacular as it seems. All right. They got a PEA, which is a preliminary economic assessment. So let's look at what the resource is made up out of. Hey guys, can you still see me? I think that the stream fell out for a moment, so you know, a lot of problems hitting me back to back right now. The sore throat and the stream going down. Let me know if you guys can see me again. I think we should be online right now. Oh yeah. Nana says, if I study correctly, metals are going to be weak in the months of June, July 26. I hope to be picking up again in August. Well, Nana, if the metals are going to be weak in July and June, that means that a lot of the stocks are going to get cheaper. So that means that we can pick up Boliris a lot cheaper. Oh yeah, thank you for letting me know that we're back. All right, so this is the economic assessment for their Santa Fe project. It's a project where they said that they had a problem with the recovery of their silver. 30% recovery is very below average. So I want to know how much of their resource right now is derived from the silver component. And we are going to look at that with the mineral resource estimate. Hopefully they have a table for us. They do. We are going to make it a little bit bigger. So first off, indicated resources, everything above here. So they say that they have gold gram per tons, right? So the grade of gold is about 0.9 gram per ton. That is not an extremely good grade, right? We looked at another open pit mine just a moment ago, which has 1.77 gram per ton. So that's almost double the grade. And grade in this industry is money, because the more grade you have, the more money you're gonna make when you pull it out of the ground. It's very simple. So they have about contained gold, 1.4 million ounces. All right, that's pretty good. Contained silver, 11 million ounces. All right, so a lot of their value in this deposit comes from the gold directly. That's good. That's pretty good. All right, so the fact that they have a low silver recovery rate might not hurt them financially all that much, and that is pretty good. All right, so that was one question that was answered right now. That's pretty good. So let's see, do they have any other project? The West Santa Fe, without exclamation marks, so they aren't screaming as loudly about this one as they did at the last one. They own it 100% via an options agreement, so they have to buy this off at some point. And they don't have a resource here yet, but they are drilling it as it seems. Some soil samples, some airborne studies. Okay. They got another project, the Moho project in Nevada. Let's see. All right, so they got one drill hole for about 40 centimeters, grading 31 gram per ton gold equivalent, with a high silver component in there as well. The fact that it's only 0.4 meters makes this not so interesting, right? If this was a fat result, right? If this was like 10 or even 5 meters, you know, it would be extremely interesting. But now, you know, 0.4 meters, that's not really interesting, especially since it's 150 meters down, right? So you gotta dig for 150 meters to get half a meter worth of pay grade. Of course, that's pretty low chance that somebody's actually going to do that. So, let me just look at their financials. And let me look in the key takeaways. All right, so they do say that it's going to be a profitable mine at 2,700 gold, which means that it's going to be a profitable operation at $4,500 gold, right? And here you can see that grade matters a lot. So we have a deposit that is 1 gram per ton, and that deposit has a 34% rate of return, right, at $2,700 gold. But we just look at the project of Belarus that had a 100% rate of return, right, at about the same gold price. Why is that? Well, partly that is because their grade was almost twice as this project's, right? So size is important, grade is important, location is important, and their plans are important, right? So they are currently doing some drilling and they are currently working on the permits. Both of those are pretty good things to be working on. This can go, let me just clean up my browser real quick. This can go, that can go, that can go, that can go. Financial statement, right? Okay. So with this stock, KA Gold holds 3.2%, retail investors hold about 55%, and institutional hold about 41%. So as you saw in the last stock, right, that we looked at, a lot of big names were in there. In this one, a little bit less. A lot of this is retail investors. This sounds like a retail-oriented stock, right? Big deposit, low grade. Who knows if they're actually going to mine it? But, you know, story is pretty solid, so let's just pump it onto retail and see what happens. You can see that the shares outstanding, they have 360 million shares outstanding and they have about 70 million warrants. So that means that 20% of their flow, of their share count is still in warrants and options. And what that means, right? What that means is that a lot of people have an option on this stock, right? So let's say I was an investor and I was pretty early in this stock and I lend or I invested in this company somewhere in 2023 to 2025. I gave them some money, they gave me some stock, and they said, now you're gonna get an option together with that stock because you took the risk to invest with us before we were big. That means that there is about 20% of the entire stocks that are out there are still, you know, in people's pockets. And how do I explain this in a very simple way? If there are a lot of shares, a lot of warrants that have been given out in this period, right? They are being given out at a certain strike price. So let's say I invest in this company at 7 cents. right? They're going to tell me you're going to get a warrant for 15 cents or for 20 cents, and it's going to be, and it's going to be, and it's going to have an expiration date 2 years from now or 3 years from now. If the stock shoots up like this, right, I, with this warrant, can say, I would like to exchange this warrant for a share in the company. So you pay them 15 cents and you get 1 share in a company. Of course, this is not going with cents, right? This goes with a bunch of stocks. So you say, here's 15 grand, give me 10,000 stocks or 100,000 stocks. You know, those are the kind of deals. But these warrants are now in the money, which means that there is potential selling pressure that can be put on this stock through these warrants, right? Because if people need money, they exercise the warrant and they sell the stock. That is a possibility that can happen. So seeing that it actually ran up so much without a big pullback, this might pull back more because there are a lot of warrants outstanding. So if we are going to dive into the financials of this stock, I want to know what are the strike prices of the warrants that are outstanding right now. We are going to look at that in a second. Well, we are actually just going to look at that right now, right? Financial statement as of March 2026, so a little bit more recent data. That's always good. Exelon Resources is an interesting project. Let me see if I have. Let me see if we have time after this one to get into that. Otherwise, we're gonna do it another time. Feel like I should make these streams a little bit longer in the future because after my hour-long rant about the current state of the markets and about gold and silver and all of those things, I usually only have time to do about 2 stocks in this whole live stream. So how would you guys be interested in a longer stream with more stocks? Let me know because I can just clear my schedule and make way for a couple things. I don't think it will be nice for you guys if I started doing this earlier, would it? Because I feel like a lot of people are located in the US and in Canada. Right now it's about 5 o'clock for me, about 6 o'clock p.m. So let me know. Do you guys want it longer? Do you guys want it earlier? Let me know, let me know, let me know. Anyway, Lahaton Gold has, as of March 31st, about $11 to $12 million cash on their balance sheet. And they have exploration and evaluation assets of 23 million. So that is their resource. That's not cash. They got 12 million bucks in cash. And what kind of liabilities do they have? Let me just get a little bit more water. Account payable, asset retirement, obligations, deferred tax liabilities. All right, so they got very little liabilities. They got a whole bunch of cash, It's almost midnight for you, Nana. Yeah, Malaysia, other side of the world, huh? All right. Bunch of cash. That's always good. So in the 3 months ending March 31st, they had investor relations and promotion expenses of 281,000. Again, I'm just saying it. If you're spending 300 grand in 3 months promoting a stock, hit me up for a new website, because we can make something different here. You're spending 300 grand promoting your stock, and then we go to the Santa Fe website, and then it's Santa Fe with 5 exclamation marks. It's could be spent a little bit more productive. I feel like you spent couple 10 grands on a website and you get a whole different experience for your stock. Just throwing it out there, But they've spent more on promotion materials than they did on their office, general, and administrative expenses. That's pretty good to see, because at least with this, you get a return right in this share price. But nothing else that really jumps out. Weighted average number of common shares outstanding. So they have diluted their shareholders, right, for about, roughly, what is that, 228,622,901 shares minus 374,006,740 shares is about 135 million shares. That is about, what is it, 3/4? So they have diluted their shareholders for about 75%, right, year over year from 2025 to 2026. So very high dilution rate. That is not good to see. The stock is trading right now at about 160 million Canadian. That is about 110 million US. 2 million ounce deposit. So it's cheap, but the dilution is high. Question that always needs to be answered with that is, are they going to be able to go into production before the dilution eats away at your potential profits? That is always the question, and that question is always better answered with an extremely experienced management team and with third-party validation from big names. Unfortunately, this stock doesn't have the validation from bigger names, but I haven't looked at the management team yet, so maybe they surprise me. Right, and you can see that dilution right here. They went from 206 million shares to 358 million shares, right, from January 1st to January 1st, 2025 to 2026. So that's 150 million shares on a 200 million share basis. So that's a heavy, heavy dilution rate year over year. Unfortunately. And it doesn't seem to stop, right? Because they had 358 million shares outstanding in January 1st, 2026. And now they have 408 million shares outstanding in March. In March. Had a voice crack there. Hell yeah. But so they are, diluting you about 20% in 3 months. It's a high dilution rate in this stock. And if I'm being honest, I don't really see where the money is going that would justify that rate of dilution. But they have a net loss for the period of about 400 grand. Nothing else. Exploration expenses of about $1 million, right? So we are going to look at note number 5. And then they did some financings. Some people exercised their warrants, right? So this is what I talked about. People are exercising their warrants. They are taking position of the stock, which might result in some selling pressure on this stock because people are now holding stock. And, they were holding warrants, they're holding stock right now, and they could sell that stock at any point. The exploration expenses were number 5, I believe. Right. So these are the expenses that they've had. And this is in the 3 months from December 31st to March 31st. They have spent some money on personnel, on exploring support, on drilling and related activities, 750,000, right? So most of the money in their exploration is going into drilling. That's pretty good. But I don't really understand why they are then diluting so much. I don't understand why this company is diluting themselves 20% in a couple months when they're only spending about 750,000 bucks in exploration, right? They're spending $1 million in developing this project. That's fine, right? They're spending some money on the promotion of this stock. That's also fine, but where is the rest of all of this money going? I don't really see that. I don't really understand why this dilution rate is so high, but it is worrying me. Because at least in the previous story, right, the Polaris mine, we also had high dilution, but at least they're working towards a mine, and at least they're working towards some form of production. And that would mean that the dilution eventually stops, right? But with this, the company confirms it is now fully funded into 2027. Well, yeah, I hope so. You know, they just diluted their shareholders for 20% in 3 months. So I hope that they're fully funded. But, you know, with stories like this, you never really know what fully funded means, right? So let me explain what I mean by that. Let's say I own a piece of ground and I want to drill a hole in there and I bring $1 million. The first hole was fully funded. Then I drill that hole and now I find gold. Well, now I want to find a bigger exploration target. So now I need to have more drill holes. So all of a sudden I'm no longer fully funded and I need to go back to the market. So fully funded only means so much, right? It doesn't mean that they're not going to dilute any further, right? Because if they find some interesting results, of course they are going to up the exploration target and they are going to up the drilling, and that means that there's going to be more dilution. So fully funded doesn't really mean that there is going to be no more dilution, unfortunately. Without financing and ongoing warrant exercises to continue development and permitting activities. Yeah, so they are having a lot of warrants, right? So the exercising of a warrant means that somebody takes possession of the stock. And you can have an opinion about a stock, but if you hold something and the market goes down and you need to sell it, you know, that's a pretty fast way to get this back down again. If you exercise your warrants and then sell the stock. A goes the longer stream with more stocks is cool. I think people in Canada will be asleep if you start earlier. Yeah, I think so as well. But let's look at the management of the stock because we haven't looked at that yet. And I want to see the people involved there. So the founder, CEO, president, and director is Kimberly Ann. Looks like a pretty nice woman. So she founded multiple junior mining companies, served a lot of positions, raised $210 million. Prodigy Gold, all right. While at Prodigy Gold, responsible for the corporate communication program, facilitating equity launches, generating analyst coverage. And that was a key aspect in them selling the company to Astro Argonaut Gold. All right, so she's a marketer. Following that, she joined Waterton Global Resource Management, a multi-billion-dollar private equity firm focused on the resource sector. Right, so afterwards she got into the money business. Then she joined PPX Mining as a CFO. In 2017, she founded Latin American Resource Group. All right, so she's done a lot of things, right? I don't really see any huge names. Let me see. Boots on the ground. Damn, I'm gonna get censored. I'm gonna get blocked on YouTube if I show this too much. Damn, what kind of picture is that to put on your website? Jeez. All right, I didn't know I was gonna take that kind of turn. That's crazy. Miranda Wurstuk, director. She is a dynamic corporate finance and investment banking professional with over 30 years of global experience in resource financing. So, money woman, specializing in equity, debt, and alternative financing structures. All right. Evan Pelletier is a senior mining professional, 30 years of underground mining experience. Lakeshore Gold. All right, so this is relevant experience, or well, this is experience, but experience underground mining. We are talking about an open pit mine right now, so I don't know how, what do you, how do you call that? How relevant that experience exactly is, but we are gonna take it for what it is. 30 years of experience. This is the only real mining experience I've seen, right? And it's the third director on the website. Internationally, he has had some roles in Mongolia, Argentina, and Africa, which is not really relevant because we are talking about America here, which is very different from Mongolia and Argentina. Shane Williams is also currently the CEO, president of director of Red West Lake Gold Mines. That's a name that you guys probably know. Bringing the Medicine Mine gold mine back into production. So this is a very relevant experience because we are talking about a past producing mine here as well. And he was a chief operating officer for Skina Resources. That's also a very well-known name. Where he was involved in the SK Creek Gold Project. All right, so this is a very interesting name. He's a director of the company. Anthony Rowe is also a managing director of Arrowpoint Mining Capital, an independent consultancy and investment advisory business focused on the mineral mining and critical mineral sector. Right. All right, so you got a lot of people who have a background in money in this stock. You got somebody who has a background in marketing running this. We can see that they dilute their shareholders pretty decently, right, over the past couple of years. And it is unsure what their plan is going to be for the next couple of years, because the website that they are using is pretty old, talking about plans that they had in 2025. For me to continue looking into this stock, right, I would need to find a very updated plan of what they are going to be doing with all of the money that they are raising. You know, I'm personally not going to be looking, putting this in my watch list. It doesn't have a clear enough plan for me to continue. You know, where Borealis had a pretty good plan, right, with a mine that they're building out, and then another mine that they are going to be building in the future. I don't really see such a plan for this stock, but they are diluting, so you are kind of buying into something where you don't know what the outcome is going to be, and that for me is just something that I don't want to do. All right. Got about 20 more minutes because I gotta be leaving at 6:30. I got some plans tonight. But, you know, if you do own this stock right now, congratulations, because it ran up from 2 cents to 40 cents right now. But just know that the, what's it called? The warrants that are outstanding that are being bought by these investors, they could be going for sale pretty soon, which means that there could be a potential downwards pressure in this stock. Not saying that that is going to happen, but I'm saying that that is a possibility. So keep that in mind if you own the stock or if you're thinking of, you know, buying some soon. Anyway, I don't really have more time right now to get into another stock. Next time we'll go live a little longer so that you guys can just put your recommendations in, and then we can look at some more. You're welcome, Simba. But yeah. I'm wondering, man, what next week is going to be for these stocks. And I'm also wondering, right? Can I show you guys this? Let me see. Let me see if I can show you guys this. Right. Gonna be very mean right now and show you my portfolio without the actual names. Hey, happy weekend, Nana. But this is my portfolio as of today, right? And I want you to look at this column right here. So these are the valuations of the companies that I own. I'm not going to show all the names because, unfortunately, I kind of want to put them behind a paywall. I'm very sorry about that, but it's got to be done. We got to take care of ourselves out there. Um, these are my positions, and a couple positions really jump out to me, and it's this one, which is valued at 6.2%, and this one, which is valued at 5, and this one, which is valued at 7. Right? We just looked uh, at Polaris, and I really like that story. I really like what I saw in this stock, right? I really like the fact that it's down 50% from the recent highs. I love the management team. I like the fact that they got a mine into production right now. They're building towards a second mine, which is going to increase their production. They're doing that on low capex with high grades. So that's a very good overall story. However, I don't have any cash right now. So two things that I want in the future, right? I got a couple questions right now about this stock. As we can see right here, right? I want to see their mineral resource estimate, right? And I want to see their latest financial statements, meaning from January 1st until at least March 31st, just to get a little bit of a better understanding of where we are right now in this story. Once I got that, right? And once I know the questions about that dilution rate, which is extremely high, once I know if they have raised the production numbers, right? And if they're profitable right now, once all those questions are answered, then I need to be looking at what stock do I sell to buy some of this, right? Because this stock is pretty cheap right now, as we just looked at. But I got a couple stocks in my portfolio that are getting less cheap, right? Not expensive, but less cheap, right? I got 3 of them right here. So then it's just going to be a rotation, right? I follow the Hedgeless Horseman. I really like the work that he does, but he always talks about value shuffling, where you sell something that is cheap to buy something that is even cheaper. And I think that in this case, that is what I am going to do in my portfolio as well. If I get answers to these questions, I am going to sell something that is less cheap for something that is cheaper, which is this stock, if all of these questions are answered, right? So I need to do more research. I need to wait until the mineral resource estimate. I need to wait until the financial statements, and then I might make a decision on this. And that requires patience, right? And that's your biggest advantage in this market, really. It's patience. You need to wait until you have all the information. You need to wait until the things look good before you dive into something. And that might mean that this stock is going to go a lot higher before I have all my information. That's fine. It's still cheap, right? It's cheap right here, and it's going to be cheap here, and it's probably going to be cheap here as well, right? But we need to have all the information. I don't want to be making hasty decisions on a gut feeling because, that's just not the way that I want to invest. But who knows? I'm just throwing this information out there. You can definitely decide that on your own. But yeah, thinking about wrapping it up soon. So if anybody has a couple more things that they want to talk about, things that they want to check up on, let me know. Otherwise, I'm just gonna call it a day and get going with my other plans. All right. All right. Yeah, AJ Wells, have a great evening. Seems like we're getting to the end of the stream. Thanks everybody for watching. Really enjoyed being here again. I'm gonna make this stream into a couple videos again. I'm gonna be posting them next week. So if you missed anything, just wait for the videos to come out. I'll be live again next week. Let me just check my schedule real quick before I say things that I can't deliver upon. Yes, I will be live again next week, same time, 3:30 CAST, Central European Standard Time. And then we will go on for a little bit longer. Right, I had to cut it off short today because I have some other plans. I will see you guys next weekend. Simba, have a good weekend. You too. And I'll see you guys later. All right. Bye, guys.